Ladies and gentlemen, welcome. Thanks a lot for tuning in. We are live at track one, the 10 a.m. to 10:30 Eastern time. The next big thing to keep our eyes on, DeFi Dissected. I am the moderator. My name is Matt Zahab. I am the CMO and podcast host at Cryptonews.com, and we have an incredible panel on board with us today. To begin, we have Clayton Roche, community lead at UMA. We have Jaynti Kanani, the founder of Polygon. We have Matthew Graham, great name by the way, Matthew, CEO at Sino Global Capital, and Melody He, co-founder at Spartan Group. Thanks for joining us. Looks like we are good to get going. We will kick things off. I'm going to start with Clayton. Clayton, your beautiful face is first on my screen. Let's get going right away with what are the most important trends of DeFi in 2022? What do we really have to look forward to?
Sure. So I will preface this by saying I tend to avoid predictions. I am somewhat of a terrible trader, so don't listen too hard. But as a builder, as someone focusing on infrastructure, the couple of things that stand out to me right now is I think that we'll continue to see a growth of the kind of sort of bribing thing that we're seeing across different DeFi protocols with the curve wars. I think that that will continue to play out. I also think that L2s and bridges will continue to make kind of a splash. I think they're going to continue to be increasingly relevant. And I also, this is a bit of bias perhaps, but I also just still continue to see the Ethereum ecosystem really taking center stage in the near and medium term future.
Jaynti, you are the perfect person to talk about the Ethereum landscape and ecosystem. I'm going to throw it over to you. Ball's in your court, mate.
Yeah, so as Clayton said, L2 and the whole Ethereum ecosystem is important part of DeFi. What I would see like in 6 months or 12 months down the line, we need better solution to bridge the assets between the chains, between the L2s. We as Polygon working on the multiple ZK solutions. So, and we are also seeing even if currently, let's say if we have two chains, two ZK rollups or one POS chain or ZK rollups, it's very hard people to understand like how DeFi, how tokens are moving from one chain to another chain. We have been hearing a lot of complaint about people sending the transactions on or sending tokens on different address on different chains on Ethereum or Polygon, and then they come back to us and say, okay, hey, our tokens got stuck because Coinbase is not supporting Polygon chain and they're just supporting Ethereum, and they just make a transactions on the Polygon itself. All sort of things are very important for the DeFi itself. Not just a DeFi, I would say is important for NFTs and other parts, but DeFi is way more important for compared to other things because there is a money heavy value involved. And so even if we, let's say we go with the L2s and multiple chains narrative, we definitely needs a better solution to for the DeFi ecosystem as well. The second problem I'm seeing in general on the multi-chain narrative or multi-chain system is that liquidity for each DeFi protocols. So we also need to make sure like we don't kind of dilute the liquidity of the protocol itself, and how do we use each other's liquidity more creatively. So composability is major point to focus on going forward for the whole in the DeFi and the L2 system. Yeah.
Thank you for that, Jaynti. Matthew, I'm going to throw it over to you next. As an investor, what do you look at the most when it comes to investing in DeFi?
So for many years, we've started with a fundamental thesis that the characteristic of really any financial market is that it trends toward increasing complexity and abstraction over time. And that's for sure served us very well. I think that one of the reasons that we're in the current market climate, though, is we're in a little bit of an unusual situation where the maturity of many of the products that are being built has outstripped the available liquidity to support these products. And so really what we would love to see is products and solutions and methods that directly address the onboarding of institutional and retail liquidity and the user experience for those two very different types of clientele. So, for example, for retail, we need really user-friendly, clean UIs like Orca is building, for example, which is one reason we're bullish on Orca. We need a user experience that is suitable not just for crypto natives, which is where most of the participants in the market are in 2022. We need to be able to expand that to normies. So really, we're hoping to see progress on those two fronts.
Matthew, great name, by the way. And I love how you just touched on sort of the crypto natives and the normies. One of the things that the normies got a taste of over the last couple of weeks was the UST and Luna fiasco. Melody, I'm going to throw it over to you. What can we learn from what happened in the Luna UST fiasco over the last couple of weeks?
Yeah, I was going to mention that. I think that definitely has sent very strong shock through the entire community. I think people now are very much focused on regulatory risk for DeFi protocols because they are, most of the protocols are very new, right? None of them has done any KYC ML, and a lot of the products are not being tested in very volatile markets. So I think there will be a lot of regulatory headwinds in the DeFi space. In terms of builders who are building DeFi, so for Spartan, we actually have three businesses, right? We have Web Venture Fund. We have Venture Fund focused on DeFi, Venture Fund focused on NFT market, Metaverse, and gaming. And we have advisory group where we help projects to launch tokens, and also we do quite late stage M&A transactions. We also just launched our venture studio. We're trying to find opportunities to build together with some of the close partners we had throughout the years that we've been investing, advising, like Solana or Flow or Polygon is also where we invested. I think one thing we, after the Luna incident, I think internally, we're like, oh, maybe we should deprioritize DeFi right now, just because there's a lot of uncertainty in global regulatory landscape, and we don't want to be, making that kind of risky move right now. But we're closely monitoring that. But in terms of getting into retail, in terms of non-custodian wallets adoption, and then have native DeFi features built in and offered to retail, there's no better news than Robinhood is integrating a non-custodian wallets, right? So there's another company we worked very, very closely with. It's actually a walk to earn company or project from Web2, right? Within a month, they created 6 million non-custodian wallets on Near. Right, it's incredible, and I've never seen non-custodian wallets created this fast. Right, even some of the games like Stablecoins, I believe when I check on chain, they only have like 20, 30,000 non-custodian wallets. Most of the stuff is centralized, surprisingly. So I think when non-custodian wallets number reaches a certain magnitude, we're gonna see very interesting DeFi products offered. And what I really want to see is DeFi and native digital assets, whether it's NFT from gaming or NFT from music, and all of these are integrated into a one bigger ecosystem. I think DeFi will really help the growth and production, right, of the NFT and the Metaverse ecosystem, and also be able to bring liquidity, right, to all of these experiences. So these are probably some of the things I think will happen in the next 12 months.
Great, thanks for that, Melody. Another really interesting aspect of DeFi is stablecoins. You really can't have a crazy DeFi ecosystem without stablecoins. They are the bread and butter and the backbone of the DeFi ecosystem. And again, a lot of turmoil with them. right now. Clayton, I'm going to throw it back over to you. What can we look forward to in regards to stablecoins over the next couple of years? And as the general public, should we still be worried that there could be another UST fiasco on the way?
I would always advise people to be worried. I just think that's like a good to take when it comes to these kinds of things, especially when we're talking about very attractive APYs and things that might look a little bit too good to be true. You know, the thing that got me into DeFi, it actually renewed my faith in crypto, was learning about DAI and MakerDAO and how that worked, and basically how they were able to create a stablecoin on the back of a volatile asset. And despite a couple of hiccups, MakerDAO has done an amazing job and has really lasted a number of years. And so it's not algorithmic. It doesn't have the same properties as UST. And of course, there are sort of drawbacks or demands on the ecosystem when you have an over-collateralized stablecoin like this. But I basically still expect to see DAI and MakerDAO continuing to prevail. The other thing I'm quite conscious of is the fact that USDC and Tether are both extremely big players in the stablecoin space. When Melody is talking about non-custodial wallets, like USDC works fine in a non-custodial wallet, but its peg and its value is almost entirely based on the fact that you have a one-to-one cash out option through Coinbase in the US, right? And so even though the token is able to flow through the ecosystem freely, it's the gateway in and out that's very sort of strictly KYC'd and watched and everything else. And so like, that's a bit complex. And so I do sort of expect to see a certain, like a growing tension here where the space wants truly decentralized stablecoins. It doesn't necessarily want to make the trade-offs that MakerDAO forces upon the ecosystem, even though I think it's great, there's trade-offs. And it doesn't necessarily want the kind of KYC and the regulatory compromises that are necessary with a product like USDC. So all of that being said, I do think there's a lot of growth to continue to see here. I don't think we've seen our last algorithmic stablecoin. I do think that there's probably an answer there. I don't know what it is, but yeah, I think that we have, hopefully we don't see a crash quite as big as UST, but I do think that we have some more exciting events to keep us checking the news here to come.
We definitely need a lot of regulatory changes and solutions in the DeFi space. Jaynti, throwing it over to you here. If you were running the show, if you were in charge of all the regulatory aspects of DeFi and crypto as a whole, what regulations would you put in place?
That's a very hard question, to be honest. I'm definitely kind of biased toward like two things. One is we need regulatory stable coins like USDC or maybe USDT, which basically gives normal people to have some sense of security from the government or from the regulator perspective. But we also need some kind of innovations in terms of the how like non-regulatory or self-decentralized stable coins like RAI. So obviously there is DAI, which is highly collateral system, but there is one more aspect of stable coins is RAI. I'm also kind of want to see more of some experiments on top of like on similar to those stable coins where it is not exactly algorithmic, but it still provides you the security against the volatility in the crypto market, right? Just it's not pegged to any fiat currency, but it still kind of hovers over some values, which is very, very important. Like we need kind of those kind of experiments. So as a regulator, if I would kind of know in the position of regulators, I would suggest kind of having a small committee or maybe kind of oversight over the stable coins, so we can kind of also experiment with the regulatory stable coins like USDC, USDT, and also try to create stable coins like RAI, which is also backed by somehow like maybe government issued or people who like fund or some kind of support if it fails. So I think I think I would love to see more of those kind of things where experiments, but kind of in kind of a sandbox version of that. We don't kind of put it in the wild, but start with just few places or institutions and experiment there.
Thanks for that, Jaynti. Matthew, throwing it over to you now. Again, as an investor, can you walk me through some of the conversations that you and your clients have, specifically DeFi combos? What questions are they asking? Are they wanting to take advantage of stablecoin yields? Is it other aspects of DeFi? Walk me through the combos that you're having with your clients.
So I would say that most of the conversations many of the conversations that we've been having in recent weeks are around kind of higher level issues in the industry. And I think this ties in nicely with the previous question about regulation. I think there's a huge need for self-regulation within the industry. There's a real need for better norms and standards for the way major industry participants conduct themselves. I think many models are fundamentally extractive, and there's a fundamental lack of transparency. And these problems only get worse in times of market stress, as we've seen in recent weeks. I think it's an enormous problem. I think it is a very negative signal to regulators. I think that it speaks of a lack of maturity within the industry. And so a lot of our conversations in recent weeks have been around that. It's not super obvious what solutions to these types of problems would be, but it's very clear that there's an enormous need for better transparency, more professional norms, and less extractive behavior throughout, I would actually say, fundamentally almost all types of participants within our industry.
Thanks for that, Matthew. Melody, going to throw it over to you here. As co-founder of Spartan Group, which is really a world-class advisory firm, what are you and the team advising your clients on? Are there any areas in particular that are reoccurring conversations that are happening?
Specifically related to DeFi, well, we make a lot of investments as well. We have like over 100 portfolio companies, and many of them are DeFi projects. On the advisory side, I mean, we're not actually actively working on any DeFi right now, but I'll have to say, like anything that we are doing now, it's all integrated, right? DeFi and NFT. That's kind of where I want to focus my time. And a lot of the projects come to us, and we work together with them to shape certain products, what that look like, what is the go-to-market strategy, and a lot of them is crossover between the two, and try to offer products and services in both areas. I think what we advise is definitely very, reasonable returns, right? If it's DeFi products, reasonable returns, but high enough to be attractive. And we need to be very, very careful, right, with the security audit, and keep a promise, right? What we can deliver it needs to be very concrete and backed up by real assets. I think in terms of like transparency, to be honest, I think Luna is pretty transparent, right? Everybody know that Anchor shouldn't have 20% guaranteed yield. Everybody can see their collateralized assets was going down as they are subsidizing the return. I actually do not think they were opaque. I just think the attitude of how it was marketed and how people worship this kind of heroic figure, right, can deliver such a outrageous return, and people they are blinded, right, by this extreme hype. So I think I think this thing happened inevitably to the industry, and I think it's a good sounding board. It's a good alarm for all of us.
Let's take a quick step. Let's put our big boots on right up to the knees. Let's get a little dirty and let's jump into the hot take factory. Clayton, we're going to start with you here. What is something that really only you and a few other people believe in? It could be DeFi related, crypto as a whole, whatever you like. But what is a Clayton hot take?
Sure. I guess there's two things that come to mind. The first is that I think the next couple of years are going to be, for me, more pleasant building years. I think during bull runs, markets just go wild and they don't sort of acknowledge and respond to the right things, to the things that are actually building fundamental infrastructure. And so I'm hoping and also kind of feel like the next few years might actually quiet down a little bit from that perspective. The other kind of hot take I'll make here is that again, this is more of a hope, but I really hope that we continue to see the growth of, my connection's getting funky, that we're not just talking about regulation, that we're still talking about unstoppable financial products, non-custodial wallets, and completely permissionless access to decentralized currencies, these really fundamental basics of DeFi. I think that we're going to continue to see growth of that, particularly in countries where either their governments are unable to secure contracts or just where there's large populations of people that are unbanked. So those are my two hot takes for you.
Thanks for that, Clayton. Jaynti, you are up. Put those big boy boots on, jump into the hot take factory. What do you have for us?
So first, I think regulatory position from the different countries would be harsher on crypto before it gets better. So I'm seeing like next 1 to 2 years would be very, very difficult for everyone in the crypto, due to obviously USD and the Luna. But I think it will pass on those things, and I feel like after 2-3 years we will in the better positions in terms of the regulations. The second thing I'm hoping, like, I feel like I'm seeing more and more because I'm working on the platform side, is that still like the scaling of the applications or DeFi, it's still unclear to many people, and people haven't grasped the idea of like how we're going to scale this blockchain to the way we want, right? Take example of Visa or MasterCard. People are saying, okay, there are the blockchains who are processing the transactions of the Visa level, but it's still not there. What I'm seeing is that Visa only processes some payments. What we are thinking about on the blockchain is to process everything, most transactions, including DeFi, NFTs on the blockchain. So it has to be more than what Visa and MasterCards are doing. So we need to figure out a way to scale blockchains in a major way, without losing the obviously composability and the usability in a way. And I think what we have been doing at Polygon within ZK, it's still one step. Like, we are just a one step, first step to achieve that. I'm seeing like after few years, once ZK rollup is there, we have to figure out a way to solve these problems with the ZK tech or other kind of technologies. And I think with Polygon, we are kind of seeing that happening and seeing through like what we're going to do and how we're going to fix these problems down the line. So I think these two things, regulations and the scalability, like it's a major things I'm seeing as my hot takes. Yeah.
Thank you for that. Matthew, you are up next. Put those boots on. What do you got for us?
I'm not really a big believer in hot takes, but if we were to define hot take as providing a viewpoint where the probability of occurrence is greater than the market is expecting, and if we were to take a 5-year view, then my 5-year hot take would be this. Thus far, the United States has been, in my view, suffering from an innovator's dilemma, but played out on a nation state scale. So we're kind of captured by legacy financial interests. Finance makes up such an enormous part of the economy, things like that. So we've been playing like a guard your flank kind of, from a regulatory perspective. But I do have probably a very cynical view of how the Washington, D.C. game works. And I think it's about money and influence. And I think that there's so much money flowing into, unfortunately, because I think Citizens United should be repealed. But, unfortunately, that's the way the game is played. And there's so much money flowing into PACs and things like that to influence policy in Washington that if we were to take a 5-year view, I think that the probability of DC flipping from really an unfriendly and anti-crypto stance to something more neutral or even mildly positive, despite the short-term overhang from Terra and Luna and things like that, I think it's probably greater than people expect. So that would be my 5-year hot take.
Interesting. I love that. Melody, you are up to bat. What do you got for us?
Nothing new, I guess. I think we are in a relatively winter market, slow moving, but it's also the best time to build. We've gone through a few cycles, some of the best investments we've done were invested through the last long, 2 years of winter. And I do feel there is a lot of energy of building variety of different assets, whether it's real world assets somehow on chain or natively digital experience assets, increasing value because people's engagement, involvement. And I'm seeing just really interesting integrated DeFi services to really fulfill and enhance this economy being built. I think the magic power of Web3 is enabling a lot of people to work and make money, and that these financial services should serve these assets, right? Should serve these decentralized businesses, not just as a DeFi standalone, but really integrated with a real decentralized business. I really want to see that. For example, if we can build a piece of digital fashion or digital jacket, right? You can have the material as an NFT, maybe the buttons are NFT, maybe the zippers are pockets, pants, and these materials can actually be funded through supply chain finance, right? So the designer of these fashion pieces don't have to pay until the final sale goes through, and every time it's transacted, the material suppliers or maybe the artist, or maybe the protocols, everybody gets paid at the same time. So you have an integrated financial supply chain integrated with the DeFi, the construction of the NFT, right? I'm just a random example, but I think something like that, cool and creative, I want to see that being built. So that's what I guess my hot take or my what I wish to see.
Thanks, Melody. Folks, we're getting a little tight for time. We got about 2 minutes until we wrap up. Melody just touched on NFTs, still a very trendy topic. Might have won Oxford's Word of the Year last year. Clayton, I'm going to throw it back over to you. Tell me about NFTs and DeFi. What synergies do we see between the two of them?
Sure. So NFTs, I think, have really a lot of use even outside of the kind of art space. And so the places that I'm most interested in NFTs would kind of go in the area of governance, for example, or having NFTs that are more financialized. And so something that Uma's worked on is certain NFTs that could have certain reward streams that come to them. And so you have this non-fungible thing that has these financialization properties built around it, including cash flows. We've also experimented in our DAO with governance NFTs, where each NFT sort of gives you a different amount of governance power. And so when you do that, it becomes about the person voting. It's not about how much money they have. I think that's an interesting development there. In terms of the metaverse and the growth of kind of the digital space and signaling and things like that, that's actually a space that I'm less comfortable speaking on personally. But I do really like this problem, this financialization problem of how do you make the value of those liquid. And so that's something that we've looked at UMA because of the way that our Oracle works. You can ask it questions about the value of an NFT, for example. But it's a tough problem to crack, of course, because it's in a liquid market. So yeah, that's my take on it.
Thanks a lot, Clayton. Clayton, Jaynti, Matthew, and Melody, thank you so much for jumping on to the listeners. Appreciate you guys tuning in. CoinMarketCap, wow, I almost butchered that one. Thanks for a lovely event, and we will see you guys all shortly. Thanks for tuning in.
Thank you.
Thanks, everyone.
Thanks, everyone.